Hi everyone. Now in this session we're going to try to understand the Washington Consensus and to what extent the Chinese economy has actually abided by the Washington Consensus or actually goes completely against it. Now this consensus of economic policy approaches has been really advocated by Western institutions such as the International Monetary Fund and the World Bank, as well as of course the US Treasury Department, in dealing with countries overseas and prescribing aid to those countries. So in particular this included LEDCs and transitional economies. Okay, so let's have a look at these points. First point about fiscal discipline. We've seen that China needs to actually implement their fiscal reforms to ensure that local government spending doesn't go too far and have too much of a negative impact on total debt that is being accumulated. So the Communist Party needs to actually improve the actual controls to ensure that spending isn't getting too far out of control further down the state organisation. So that's something that, yes, okay, we could probably agree that that's important, and the Chinese would as well. Okay, so our next point, redirection of public spending from subsidies to support public industries and public organisations, and instead to actually move this towards supporting pro-poor initiatives, which could be about the provision of quasi-public goods such as healthcare and education. Of course, in China we've seen that, in particular with economic migrants, China has really failed to actually do this, and this has had a impact on inequality within China. Okay, so we can put a cross against this one. Tax reform, having a progressive system of taxation to ensure that, again, inequality is being tackled to a certain degree, is advocated by the Washington Consensus. And again, China does abide by some elements, these fiscal elements that we see in this consensus. Okay, our next point really is about market determined interest rates, and we've seen that the finance sector in China really does need reform, and the state-owned enterprises that are the state-owned banks in China need to ensure that their allocative efficiency of capital does improve, and one way to do that would be to open up the financial sector and have these market determined rates. So at the moment they do not do that though. Then we've got the point regarding competitive exchange rates. Now of course with China's exchange rate, their capital account is not fully liberalised. You cannot easily buy renminbi currency and trade that currency. Yes, in a couple of financial sectors around the world, but by and large there are capital controls imposed, and that of course restricts the competitiveness of the exchange rate. So we can certainly put a cross against that one. And further to that, when it comes to trade liberalisation, that there shouldn't be anything in the way of protectionist policies or any policies which support local domestic based firms over foreign competitors, or subsidies being provided to your export industries and so on. So this is something else that the US would certainly argue China just fundamentally does not adhere to. Our next point is about the liberalisation of inward foreign direct investment. And again, we've seen the need for China to actually reform its markets to improve competitiveness and to improve the dynamic efficiency of the economy. So this is something else that many Western companies complain about, that local firms are protected or local firms are favoured for given contracts, and then in other areas foreign firms just cannot come in to actually compete at all. Okay. Next up, we've got privatisation of state-owned enterprises. When it comes to that privatisation of state-owned enterprises, well, we've said before that Xi Jinping is very reluctant to pursue this, instead preferring to opt for a mixed ownership system where he believes that may be more important, okay, rather than full-scale privatisation. This may happen in some areas, but by and large it's likely to be more mixed ownership or continue to actually pursue these state-owned enterprises. So no, we can put a cross against this one. Next point is about deregulation of markets to ensure the competitiveness of them, and really that you have a free economy which isn't overly regulated. And we know that just isn't the case in China because of the heavy role of intervention provided by the state. Okay, and finally, number 10, legal security on property rights. So while that has improved in some areas of the economy, most notably in the property and real estate markets in the big cities, in other areas there's a real need for land reforms to be pressed through to again improve people's incentives to ensure that they can scale up their agricultural produce and so on. So again, we can see that this is something else that China doesn't really buy into within its current model. Okay, so that's it. Really, in terms of focusing in on this, you'll just want to remember a couple of areas where China just doesn't abide by what the West might hope economies might look like. And that would be a very, very strong analytical or even evaluative point, depending on the actual title of the essay that you get. So it could be that you just want to focus in on one or two particular points, which may well relate to the economic reforms that you've looked into previously. Okay, thanks guys.